Hi, everybody. This is Paula Field from Paula Field CPA, and I'm here with my good friend Rob Messett.
Hi, Paula. This is Rob Messett. I'm a financial advisor. I've got an office in Addison, Texas, as well as another one in Flower Mound. And the name of my company is called Messett Financial.
Thank you, Rob. We are going to cover some interesting changes with the law for the required minimum distributions. So, Rob, I'll let you start, please.
Okay, thank you. There have been a lot of changes to the way that required minimum distributions work over the last few months. It was actually in December of last year they passed what's called the Secure Act, which changed it so instead of being required to take your first distribution the year you turn 70 and a half, now you can wait till age 72. And in fact, that first year when you turn 72 and you're required to take a distribution, they actually give you a free pass where you could actually wait until April 1st of the year following the year you turn 72 to do that distribution. Now, obviously, you still have to do what you would have been required to do at 73 anyways. So if you do wait till you're 73 for that distribution, you'd be required to do two of them in the same year. And Paul, I'll let you comment a little bit about the tax ramifications and analysis on when somebody should do that.
Yes. So really it depends on your own personal tax situation. Everybody's tax is unique. And so you really need to have a look at what your income is going to be in your 73 year. So if you take two distributions in 1 year, essentially you're doubling up. And so that might kick you into a higher tax bracket. That would be something that we would definitely want to do some tax planning for you with to make sure that that's handled properly. Okay.
Great.
Yes. So the other thing that I wanted to mention was that the required minimum distributions have changed for the 2020 year, in that you are no longer required because of the COVID-19 to take a required minimum distribution in this year. So if you would prefer to leave your money in the stock market, you're fine to do that, and you will not have a penalty for tax purposes.
Gotcha. And I know when we were talking earlier too, Paul, you had mentioned how there's the ability to actually put it back if you've already taken it. So there's a period of time that you have to get the money back if you've taken it. And the other piece of that too is if you already have paperwork on file with whatever institution has your IRA account, whether it be your bank or some investment company, if they have paperwork on file to take it out automatically at a certain time or to take it out monthly, you need to notify them if you want to stop that for 2020. Otherwise, it'll still happen.
That's right. And it's a 60-day payback, or roll it over. Excuse me, it's not a payback. It's a rollover into a different IRA. So if you want to roll an IRA, a minimum IRA distribution that you've already taken, you can do that within a 60-day window from the date that you took it. Yeah.
There was one other change that came about as far as IRA distributions with the Secure Act also that passed back in December, and that's that whenever a non-spouse inherits a retirement plan, it used to be that you could do what was called a stretch IRA, and they could do their own required minimum distributions over decades and decades, and it could save or defer a tremendous amount of money in taxes, where with the new rule, people will be required to distribute all of their money from their inherited or beneficiary IRAs within 10 years. Now, of course, they could wait till the very end of the 9th year to do that distribution, or they could do it slowly over that time.
Yes, and the only thing that I would want to caution you on is if you're going to take a majority of it in 1 year of those 10 years, that we really need to make sure that it's a year when your effective tax rate is anticipated to be lower than the other years, or would it be better to take it in the last 5 years instead of in the first 5 years, the majority of it. So there's some tax planning that can be done with something like that, and everybody's tax situation is unique, and we would just want to make sure that we do have a look at that and do what's right for you. Yeah. So if you want to get a hold of either one of us, please please reach out. We have each other's contact information if you're having trouble finding me or Rob. I've got my own website. Just search my name, search Rob's name, and we'll be happy to help take care of you.
Thank you.
Thank you.